Well, hello everyone, and welcome to the Alternative Design February product launch. I'm Tim Harding, Chief Marketing Officer for Alternative Design, and if I sound a little bit different this morning, it's because I came down with a sore throat and a head cold yesterday morning and haven't been able to shake it yet. So today's presentation is going to be brief because if it goes too long, I'm probably just going to lose my voice and not be able to talk even if I wanted to. So with no more introduction, let's just get into the products for the month of February. Again, a very good selection here. We have 4 products on our platform, very similar to January's offering. We have a Bank of the West commodities-linked product. That's the Income Advantage that you're familiar with, the either-or product. A Bank of the West that pays 2.25% compensation to you. For the month of February, we were able to keep the compensation rates at the higher levels. Bank of the West 7-year equity-linked Income Advantage product, again an either-or product. It also will be paying 2.25% this month. And then the Goldman Sachs 8-year equity product pays a 2.75% compensation to you. And then the ever-popular Morningstar-linked Bank of the West product, 6.5-year, pays a 1.75% comp. So let's start off with the commodities product. Commodities had a very, very poor year in terms of performance in 2013, which might indicate that you want to run and hide from them. On the other hand, since they had such a poor year, this might be the perfect time to jump in. But the good news is, with the Bank of the West product, it's been enhanced. It's a 7-year product called the Income Advantage, but the minimum guaranteed rate, the minimum that a client could earn on this particular product has been bumped up to 1.25%. So it might be an excellent time to get that asset class called commodities into your client's portfolio, because that 1.25% minimum guarantee is pretty sweet. They compensated for that by reducing the upside potential to 5.5%. But when you consider that this is an FDIC-insured, principal-protected, and guaranteed way to get commodities exposure in a client's portfolio, it really is an outstanding product this month. Looks just like last month's for the most part, linked to the same 5 commodity sub-indices of the GSCI, S&P GSCI index. We've got cocoa, coffee, corn, lead, and natural gas in here. And of course, the way this product works is if all 5 of these particular commodities are equal to or greater than their initial share price on the anniversary date, the client's automatically going to receive the higher payout of 5.5%. If one or more of these commodities are negative from their initial share price, then the client will receive the minimum guaranteed. So it's either or, nothing in between. If all 5 of the commodity indices are not negative, the client will receive the 5.5%. If one or more of those commodities are negative, the client gets the minimum guaranteed amount of 1.25. Very easy to explain. And, you know, if you play with the numbers a little bit and do the math, you know, it only takes a couple of hits of that 5.5 to have this be a very, very nice paying certificate of deposit. On the equity side, we've got basically the equity version of the same product, but it looks a little better on the upside. It's a 7-year product linked to 5 individual stocks. Again, it's called the Income Advantage, the Equity Income Advantage, as opposed to the Commodities Income Advantage. Has a little bit lower minimum guaranteed rate of 1%, but the maximum interest earnable is a much higher 7%. So once again, linked to a basket of 5 individual stocks. They look a lot like last year. I think only one of these was switched out. You've got AbbVie Pharmaceuticals, AT&T, Intel. You've got Loriard in there. That's a new one, but again, it's a tobacco-based company, and PP&L Corp, which is an electric company. So once again, if all 5 of these stocks are equal to or greater than their initial share price on the anniversary date, client receives the higher payout of 7%. If one or more of them is negative from their initial share price, the client receives the minimum guarantee of 1%. very popular products because they're so easy to explain. And here, as with the commodities version, hey, all you have to do is hit that 7% a couple of times, and you've got a very, very nice return for a CD. One of the more popular ones we had last month is this Goldman Sachs product. It's an 8-year product. That's the longest duration that we have. Has a 5.5% auto cap, but a very high minimum guaranteed rate of 1.5%. I mean, think about it. This is a CD that has the potential to earn as much as 5.5% in any given year, but has a minimum guarantee of annual interest payments of 1.5%. Once again, a very attractive product, and a product that pays you a 2.75% comp. So very attractive in a lot of different ways. They did change out a couple of these stocks from last month. We don't have the current term sheet, but it's substantially the same as last month with one or two additions. And of course, this product uses the auto cap calculation, which means the client will earn somewhere between the minimum guaranteed of 1.50% and the cap of 5.5%, based on the auto cap calculation, which is, is essentially an average return, the average return of each of the 10 stocks in the basket. And then there's one of my favorites, the Bank of the West Morningstar Volatility 7 Ultimate Stock Pickers Index. Now, I've already pointed out in 2 or 3 of my webinars the advantages of an index CD. First of all, you're going to find that it's not going to be a broad-based index typically. It's going to be a proprietary index that has a very specific strategy in mind, which is an excellent story to tell to the client or prospect. You've got a guaranteed return of principal, of course, no fees in the CD, and the added protection of FDIC insurance. The Morningstar Ultimate Stock Pickers Index, I've talked about quite a bit. It's a 6.5-year point-to-point product, pure point-to-point, 6.5 years, no annual interest payments, no annual reset, straight 6.5-year point-to-point, 110% participation in the returns of the index, no cap, and it's linked to the Morningstar Ultimate Stock Pickers Volatility 7% Index. And what Morningstar has done to create this index is they have identified who they believe to be the top 26 portfolio money managers in the country. And then they have built an index that mirrors what those 26 portfolio managers are doing inside their portfolios. And then they readjust it every quarter. So basically what you have is a dynamic index. You're taking the best money managers in the country and copying what they do in an index, but with principal protection and the guarantees of FDIC insurance. Last year, this particular index returned over 15%, so not a bad return on a certificate of deposit. You can see that the holdings in these portfolios of these top money managers are full of names that you'd recognize: Coca-Cola, 3M, IBM, Nike, Costco, Microsoft, Walgreens, Intel, all big name companies that your clients will recognize. The stock pickers that they have chosen, the top 26, include some very, very big names here. Oppenheimer, Warren Buffett, of course, is in here with the Berkshire Hathaway. Lots of big name money managers. Who wouldn't want to have a portfolio managed by not just one but 26 of these guys? If you could invest in a mutual fund that was managed by the top money managers in the United States, and you were guaranteed a return of your principal in 6.5 years, plus any gains, would you invest in it? Most of us would say yes. Yes, so what you have is a dynamic index here, something you don't find in other product lines, an index that changes quarterly to reflect the changes in the positions that these top portfolio managers make. The cutoff dates, we've got kind of a short month for the month of February. Cutoff date for the commodities product is February 21st. The others are cut off on the 24th and 25th. And so with that, seeing as I still have voice, I will take any questions that you have at this point. If you do have questions, please type them into the chat box on your control panel, and I will answer as many of them as I can, as long as my voice hangs out or holds out. So go ahead and type those in now. If you have questions, pretty much the same product on our platform this month as we had last month, so I don't anticipate a lot. But if you do have questions, that's what I'm here for. Question for Michael: what is the floor or guarantee on the Morningstar? The Morningstar Link product, Michael, does not have a floor, does not have a guarantee. So the worst case scenario would be the client goes for 6.5 years and gets their principal back at maturity. Principal is never at risk, but that particular product has no minimum guarantee on it. Question from Jim, similar on the Morningstar, do you get the interest each year or only at the end of the term? Good question, Jim. It's only at the end of the term. Interest is not paid on an annual basis on that Morningstar product. It is pure point-to-point. 6.5 years, you get your principal back and whatever the index has done. Ron says, please explain the 110% participation rate. That's a 100% participation rate, Ron, would be the exact equivalent of the performance of the index. In other words, if it went up 20%, you'd get 20%. With the 110% participation, it's 10% above 100% participation. So if it went up 20%, you'd get 22. So it's kind of a bonus the way they calculate the interest there. Terry asks, are the slides available? I went through them too fast, and yeah, Terry, I can make those available to you. Brian asks, is interest paid annually on the other CDs? The answer is yes. With the exception of the Morningstar product, all of the other CDs on our platform this month do pay on an annual basis. They do pay annual interest. Okay, well, once again, I apologize for the voice this morning. I apologize for being a little bit briefer than usual. Thank you for hanging in there with me. As always, we appreciate you joining us. If you have questions regarding the products, please be sure and give your business consultant a call, and we'll be happy to guide you in the right direction. Be back here same time, same place next week, 11:35 Pacific time on Wednesday. In the meantime, have a great week.